Hello, viewers. Welcome to Sensor 360 Investor. In today's video, let's take a look at what's happening with the markets and see if we can make sense of what's been happening over the past few weeks, or certainly over the last week. So I'll start with the S&P 500 first. So this is the S&P 500 daily chart, and we can see we've tracked it up to this uptrend that kind of gave way at the peak back in July 27th, and since then it's been working its way down. Now we can see that the market has been coming off since July, and it reached its 200-day moving average, which is kind of where it stopped Friday afternoon, had towards just slightly below that key moving average. And before that, we had marked a few places where we could get a support zone. So definitely undercut this level here. And that was back just below 4,300. And then, in fact, it was right at 42.68, which is this zone here. But as it undercut that, it did find support at the 200-day and bounced off of that, hit a resistance point. We did have a follow through day within that upswing here, which didn't last too long. Came across resistance at a downward trending 50-day moving average, and then proceeded to come down. Took out the this support zone here, which is now resistant, and then by the end of the week it managed to get to its 200-day. Now from here, what can we look for, or what we look out for? So the first thing to note is that if the market continues to break, we do have a little bit more support below the 200. So sometimes you'll get an undercut and a rally. So that's one thing to watch out for. There is some additional support. So the undercut may come down to this level here, which is about 41.46. So, and then if it does not hold there, then we got the bottom, the low of the trend, and these prior resistance levels, which are support levels. Absolute worst case, if this continues, then we could find our way down to 3,600. But this is a long way off at this stage. So the other thing to kind of temper where we may find a turn, because seasonality wise, we're almost there as October plays out. But from the July peak, we can also trace kind of a few waves down here. So here's our first wave down, second wave up, third wave down, fourth wave up. That puts us into a fifth wave. Fifth waves are usually ending waves, and they will either come down and test the third wave down, or equally likely is they will undercut before they reverse. So we are at a point of testing this third wave low. We're right there. We're also at the 200-day, so we're right there, and there's additional support just below that as well. So we're in the zone for a turn for sure, and that's what we need to watch out for next week. And we'll get confirmation of that if we can get back above this 42.68, and that sticks. So that's what we'll be looking out for on the S&P. And so if we go over to the NASDAQ. So let's take a look at, we'll go from the inside out here. So this was end of Friday's action last week. We were sitting at a moving average support level. Monday kind of gapped up, but still is an inside day. Tuesday gapped down, then finished up for the day, but actually would have been still down, but the gap down finished higher than the gap down open. And then we had a down day, which was actually a distribution day, followed by another distribution day. So back-to-back distribution days. Now this one didn't clock as distribution because of the volume. However, it was a big price drop, so I would consider that as maybe honorary distribution. So I would still count this as distribution. So the net effect of all of this was that we came down to the rally lows here, which is 96.3, and we finished at 12.97.7. So just a smidge above this, but we did undercut the follow through day low over here. So given that, the market's kind of gone back into trend under pressure. Now we'll be looking for a new follow through day as we go forward, which would be at least 4 days out from here. But having said that, there may be, if this turns around in the next few days, the market may actually start to move up based on the analysis I did earlier on the S&P. So this one's in a little better shape. Still some daylight between the 200-day and where we are at now, and so we are just sitting above the rally low rally day here. And undercut will take us down to the 200-day. If we zoom out a little bit more, below the 200-day, we have some additional support down here at 12.320. So if we do continue to break through here, we'll look for what happens at the 200-day. And if we undercut the 200-day and it sticks, then we'll look for support around the 12.320 zone. Again, from an optimistic standpoint, we are in a zone where a turn could occur. Certainly, as October plays out, we may have a few more days of this, just until we kind of settle down here. So that's what we need to watch out for from a market perspective. And then if you have any market exposure, your individual stock holdings obviously take priority in the action with your sell signals. And so those should be watched. And if you're unable to watch them closely, then you may want to consider using something like stop losses at predetermined levels where you would want to be out of those positions. Okay, so that's a quick update on the market. So I'll probably do another follow up if I have additional information from continued analysis the weekend. But for now, goodbye and thanks for watching. Thanks for listening.